Hey everyone. Okay, let's just give people maybe like 5 minutes or so. I just ate. I feel like anytime I do a stream or a report after I just finished eating, I just want to fall asleep. But maybe this will keep me awake. Okay, I'll make sure sound is good. Everyone sees the screen. And then if so, we can start. Hello. Happy Sunday. Are you guys excited for your Thanksgiving week in the States? Howdy, Snack. Okay, I want to look at this in two formats today. I want to look at adjusted and unadjusted, just because I feel like this more reflects kind of where we could still have some room. I feel like the unadjusted pricing kind of gives you a little bit more flexibility in terms of range, okay? And I'll show you what I mean in a second. So when I looked at the lows off for August 2nd candle, just as a reference, guys, these are the only reason I'm using those dates is because they're aligned with annual range, okay? Otherwise, I wouldn't care to use them. Just as a recap, okay? Our annual range is roughly 1379, 1384, and they held on that day, okay? Everyone's on the same page. I just want to make sure you guys know why we're using that because I feel like it's not random. Like there's a reason why we're using these specific days in here, and using the unadjusted pricing makes more sense. So just for starters, that's why we're using that. If you take that number and divide it up into 4, you should get 346, 343 to 346. Okay, so that's just a very quick recap. Or you can, however you want to do this, if you want to break it up into parts in here, you can obviously do that too. This is kind of like a zone hold when they held at 346 down here. And maybe sometimes it's good to just refresh your memories because I feel like sometimes people just forget. And that's fine. Okay. Everyone's aware why this area is huge and why we're using these specific dates and why this was a huge structural hold right here. Okay, and I feel like sometimes maybe just refreshing your memories a bit is important. So, okay, we basically sustained a 346 point range back there. And that essentially allowed us to carry through until mid-August, all the way through till September. And then we had bull flips for October 16th, 22nd, 24th. And this kind of allowed that continuation through until mid-November. We had some potential odds for turnaround on the 17th, but couldn't quite achieve that range. And a really big flip day on the 21st, meaning range for the 20th was super, super important because this is what's essentially going to give us odds of breaking back up, okay? So, and we have taken out this range, but do you guys see where they're kind of stalling back here? Like, especially if you measure off these recent lows, like if you look at it like this, do you see how they're kind of just stalling this area here? This was a bit of an issue for me that they weren't able to retract 346 points in range or close above that. So for starters, guys, I think that should be part of our weekly condition, like to start the week, okay? Because I do think that that's probably vital, especially when we start kind of using like the in-between ranges. So if we look at this from like those structural highs versus structural close, we just want to see where we stalled, okay? So technically speaking, they did take out that 6, 7, 7, 8 and then kind of stalled, pushed us back. So when I went, and this is unadjusted, so this is going to differ just slightly from what we were previously looking at. Okay. And essentially this was, This here was basically the failure of us getting to that next zone, which is basically getting to 7K. Okay, so when I went back and looked at this, usually, okay, if you're ranging, which is what we're doing, you can roughly start testing how many points in range. And this is very important. So if we're not breaking the full 346, what's our next sort of increment? So this is measuring the August 1st lows to this candle's close on November 20th. 256. Okay, so can we conclude that we basically held very close to a 256 point range right here? And I am going to put these on the report because I do think that it's important. Yes, okay, so something else I did when I measured this is I wanted to see if they closed above. Remember how I said usually when they don't break 346, they usually get closer to like 320, 330. So I did notice that they kind of left it very close to that range there, but from like a high ratio, they did clear that, and it's pretty close to like the channel. That's why those 60, remember how I say 6640s are annual ranges? It's because they're aligned with that 346 point break, okay? That's why they're annual ranges. So from a range theory, okay, and we did break 346 points. So we did hold, we didn't close. And I noticed that the range differential is almost the same. It's about like 26 to 30 points on each end, which is what I figured from the last time. And this is like in terms of like the structure breaks. When I went back and I measured this from the highs that we had to our lows from this past week. Okay. Are you guys looking? Specifically from November 17th till that November 20th, we did break that 256 point range, but they managed to close above it. Do you see that? This is when I measured 256 from our 17th and 20th candles, because those candles are super important. And then when I went back to our November 13th, we basically held that 343, 346, but just breached. So are we playing with fire here currently? I need you guys to see these from like a structural perspective. Okay. Yes. Okay, we are. So right now we're kind of in an area where this is definitely playing with both sides. And I can see that even just based on like these increments that we have here. So like this base, and not use the unadjusted first, and then we can look at the adjusted, because I do think that they differ just slightly. Okay. Because this was a 256 point breach right here. Okay, when we went back and we looked at this from an open close ratio, so open close is off this close, this close, this close, this open, okay? 6697, 6696, right? That's an area that we definitely have to start measuring off of. What do you guys notice happened here? And we talked about this on Friday, but I just want you guys to see it. What's the point ratio that we held here? And I do think that this is really important that you guys see this. So if we were to measure, oops. Why would this be important? Yeah, so it held half of 346. So maybe this could imply that they're trying to avoid getting that full structural breakdown. Does that make sense? Even though they didn't quite close over like a 346 point ratio, they did technically test above that. They tested, so usually we range 346, 356. It's, you can kind of go in between, but from this structural open or close, they did break a 356 point ratio, right? From this structural low, they also did in terms of highs to lows. That's that 380. In terms of this structural high to low, they still broke, okay? So technically speaking, okay, us even getting anywhere above that 66 6.5, 7.1, any of those core ranges, and then sustaining 173 points from that open close gives us a chance to try fighting one more time, okay? I would think. Like, I would find it really strange if they didn't. So, but just by glancing at this, because if they were, let's say, to push this back 346 points or 356 points, then we'd be at really big risk of testing these candles here. Do you see that? And right now we have about like a 26 to 33 point offset, okay, which is what's making this a little bit more complex. I don't know if you guys can see that there, like the 380. Remember how I say usually when you break 346, you usually get 375 or 380, and vice versa, right? Or 330, 320, or 230 versus like 256. It's the same sort of idea. So right now they're currently testing around that 380 point range. Have we in the past held a 30 point buffer? Do you guys remember this? I don't know. Let's see if I can find it. Do you guys remember this back in maybe January or something like that? But we had like a buffer of about, remember I said like you can technically, and I'll see if I can find what report it was. Okay. Close to 375. I think it was back in January, okay? So maybe go back and read the reports from back in January. Because we had something similar happen to this back then. So this was kind of like the beginning of the year. I probably have to go back and double check, but essentially we basically, that was like the catching people off guard sort of trade, and we basically held that 30 point offset. So it meant that even though we can come back lower, we used about a 30 point buffer in case we did. And I'm not sure exactly, I think it was back in like this point in time in here. Okay, and then we had back tested this. Let's see, I don't know if this is, I think this is it. Yeah, okay. Remember how I said we can, sometimes you can break 346, but you can still sustain. So back in here, we hit exactly 375 points. Do you guys see that? This in here. I'm just using a past example. Okay, this is something kind of similar because, but this time they're getting close to, like, if we're looking at it from these metrics here, like in terms of this area here, do you see the 375 again, 380s? Can you guys see it? From an open close ratio? Okay. Does that put us at major risk? This is from open to close. From our August candles to here. Okay, this was from highs to lows. Highs to lows is one thing. Open to close is huge. Okay, what could that mean for us? Could there potentially be another buffer from like a high to low ratio? Like I've always found that normally when you break 380 points, you usually get around 420. Okay. Bigger risk, yes, but it could also come to a point where they might give you like that 410, 412, 420. Do you see what I'm saying? Like this kind of a range. And I find that that's always been the case whenever I see like 380 point breaks or 375 point breaks. And it does make sense because if you break 380, let's say, that's basically getting like a 34 to 44 point break. Do you know what I mean? Like off 380 or 375, that's 34 to 44 points. So that could be part of the reason why that happens. Or like a 33 or 44 point stall, which is why you get like 320 or 330 versus like 346. So what I'm wondering is maybe maybe they have like a bit of a buffer that they could work with from these ratios here, right? Off this range. So from an open to close versus a high to a low. So from an open to close, okay. Do you see how there's a lot of confluence kind of back in this area in here? Like it basically takes you back to your channel or your previous zone down here. I just want to write this down so you guys can see it. It's almost exactly at the zone. Hold on. I think it's like right at the zone area, like close to 62, 85, 87. So, okay, technically speaking, I'm just giving like a very mass volatility scenario. I'm not saying that this is what's going to happen. If they technically broke this area here, could we afford maybe a bit of a buffer to this range down here? Like from an open to close kind of theory, like the mid close, mid open. If this is with the condition that they're unable to retrace. So let's assume that they just can't get this back over 356 points, let's say. Meaning they can't come back and break 7-8. Okay, because right now I think 7-8 is a pretty massive overhead. Okay. Yeah, I think so. So I'm going to kind of go with this as like a wider range risk. But for now, I think that market closing at a core range and holding a core area, like holding that 173 point range and holding off of the 65.20s, okay, and closing in the 66.20s and testing the 66.70s. Those are all core ranges. I feel like this could give us an odd of trying to come back to these areas. You see how like this would be a 346, 356 point break? This low right here, do you see how it's structured right back to that spot there? And we're not saying that this is going to be like the highest probability. Obviously, there's a lot of metrics that have to be involved, but what's something that we have this week? And this is what could technically help us. Like maybe not entirely, but I feel like it could give us a bit of a head start. And let's measure off close or opening ranges. These should be pretty aligned. Like this is pretty aligned, and that's where the structural breakdown started around 69.06.02. Okay, so this opening price can give you that odd of getting basically back here at some point in time. It doesn't have to necessarily be now, but do you guys see the correlations here with these areas in terms of 346, 356 point ranges off these close and lows? Okay, so in order for that to happen, this is the 358, 356, okay? In order for this to happen, this is what could give you that 69.20 retest, which is what we failed. In order for this to happen, what do we have to have done, you think, for this to even be an odd? So these are the 354, 356, 358 ranges here off our 21st flip date candle. This is a very important flip, by the way. We had multiple flips on the 21st, which is why range from these 2 days was very important, okay? And when we're looking at this now from the closing point, okay, at the very least, maybe it could give us odds of getting back to these structures here. Do you guys agree? At the very, very least. At least somewhat of a probability of maybe retesting these areas here, okay? We went over the bear scenarios, but I want to cover some bull scenarios too. Okay, so now to start the week, we have to set some conditions. Obviously, for this to be the case, we're going to need a pretty solid open, right? So one of the best scenarios, since we did break 132, 133, 128 point range on Friday, and we kind of stalled the 150. 150 is half of the 256 and 346 divided, okay? Because that's 301, okay? So half of that would be like close to 150.75. So they did break that. That means that they might want to start battling how many point ranges? At a minimum, 256, potentially 300. Do you guys agree? So, and of course, if they can get this back to the 173, 172 point area, that's half of 346. So I think for just like a very, very small condition for the week, the big overhead is obviously going to be getting back to the zone, so 6688, and getting ideally back to the 6697 retest. Do you guys agree? Because if they take out that 173 point range, then you're automatically back in play again for like these 220, 230 point ranges, maybe 256. And that's what can help you negate this, help you get back to those previous weekly opening ranges of like 6765. That was the previous week's open, right? And that was this week's open, previous week's close. I noticed that they also closed us like roughly near 107 points, which is the third increment. So my starting condition for this week, I would say if they can gap us, probably at a minimum of like the 132 point ratio or 128 point ratio, which is going to be close to like 6557, 6558 area. Okay, remember our 5357 spots from Friday that we couldn't quite get back above? Hopefully you guys didn't forget that already. Remember on Friday we had 57 and 58 and they just couldn't get back above right here? Okay, so that would probably be one of the first conditions, is if they can open above this range there, that's going to give us a pretty good odd of coming back and retracing. I think in terms of range too, that's also that 26 point offset. Do you guys see it? That 26 point offset has been so like prevalent in all of these ranges I've looked at. So at the very least, although that's not really like the best odd, that would at least help our odds. Obviously, if you get like a 33, 34 point break, then you're right back at 6550. Okay, so kind of close back to like those core ranges. Anything above 66 would give you the best odd. And then obviously getting a 7-8 or 8-8 zone entry would be even better. I don't think we really need that. If they open us flat where we are right now, it's not the worst case scenario, but it does keep that downside risk in play. Okay, so let's see what they do. I'm thinking they're going to gap this above 5-7. Oh, wow, they did. We got our 5-7 gap. They didn't quite do 5-7 though. They did 6-5, 6-6, 5-5, 5-4, 7-5. That's not bad. That's still above 5-3, but not quite above 5-7. They're being assholes about that because they know exactly what they're doing. They needed it just a tiny bit higher, I think. Above 5-3 is still good though. So this is that 26 point range that I was just talking about. Like the market seems to be in these kind of areas, but let's see if they can test that 34 point range right off the first minute stick. Isn't that insane? Look at that, guys. Like the market is so calculated. So that condition being met right off the open, this is one of my first, I haven't put the report out yet, but that was my first condition, is to see if we can get a 66.53 to 57 open. And then try testing the 6665 area, because that's the 34 point range. And then from there, obviously 6628, 6631, these were really 6633, these were really calculated areas in general. So getting back over 66, 68. Okay, so what do you guys think overnight conditions are going to be? It's pretty obvious. So I can go back and finish the report, because this is off 3-3. These were the, oh, now it's going to look, these are the 44 point ranges. Yeah, get back to the zone. Okay, so, but first and foremost though, don't get too far ahead. Okay, you have to at the very least test your core areas, right? So 66, 66, 68, 71. We need that 7-8 retest. off our calculated spots of 3-3, that's exactly 44 points. From where they close, it's closer to 7-5. But if we can get these kind of structure breaks, I would imagine that the 66 to 64 point ratio has to be the retest of 9-7. Yeah, it is. Of course it is. Okay. Does that make sense? And today is a flip date, right? So the 24th is a flip. So if we can do it today, is that going to help our odds for the remainder of the week? So like the first condition is open in the 50s. Okay. Retrace core areas immediately. So like 6666 to 6678. And then from there, we want to get in the zone and try retesting 6696 to 6697 area, which is basically that 66 to 68 point range. I feel like if they can do that, that's going to really help mitigate some of the risk. And getting an 88 point break from here should get you back to like a 6720 retest. Do you see what I'm saying? Okay, so I think that's pretty straightforward. 132 to 133 points is back to last week's open. Do you guys see that? I'm not going to put visuals for all of this. I'll just write them down. But so 132 points is back to 6760s. 88 points, 6720s. And it kind of just gives you that idea. But we're not going to achieve that unless we get continuation right off this candle open. So, and all of this, if we look at it from a wider basis, could get us, this kind of open could get us back into the zone. Do you see that? Back over 6786, 6787, 6788, which could give us an odd of retesting what? This is kind of the idea for the week. If they do that, what could that give us? This is going to blow your guys' minds. Listen closely. If they give us a 132 point break off OR, which is roughly 6786 to 6788 AK zone entry, that can give us an odd to retest what? What was the big area that we couldn't quite test last week? Yeah, basically 6810, 6805, 6820s, right? I would bet money that the 173 point range off this open is 6820s. Yeah, it is. Do you see that? Isn't that insane? Look at how calculated this market is, which is basically half of that 346 point range. And that's what can get us back to basically negating all this structural downside. It doesn't mean that we don't have risk. We do, okay? But we're well aware of like the conditions that have to be met to help mitigate some of the risk. So far to start, first condition was met. We got our gap open at a very calculated range. Okay. And I haven't done any of the math from here, but I would imagine that these areas, these are probably 66, 66, 68 point ranges. These are probably the 88 point ranges. Yeah, they are. And I would bet money that this is the 128 to 132 point range. Yeah, it is. So this kind of an open, you guys, is what could give you odds of getting back to an all-time high. Okay? Do you guys want this in this report? This is recorded, but I don't really like issuing things after markets open, but kind of just so you have the idea. Like that's basically what would potentially get you a 128 point break, which is like the 256 median point or something. And 173 points. Are you guys ready? 173 points from these areas here would give you 7K. Okay, so they're trying to keep that in play, okay, for the year. And the confluence is there. So, but now they have to really grind between the 24th, 28th, okay? They don't even have to really like get too much upside range. They just have to mitigate downside risk, okay? Thank you so much, Elgo. Okay, I'm gonna finish the report, guys, so you guys have it in writing. But this is recorded on both Twitch and YouTube if you guys want to go back and rewatch. Hopefully, they're able to at least get back to the zone, back to 6688, and give us one more retest of these 6697 areas. So at least we have a shot at trying to hold. Otherwise, we're obviously well aware that these ranges in here are putting us at some potential downside. This is also the adjusted, so just keep that in mind. When you unadjust this, it's kind of a little bit different, but not too different, but just a little bit different in terms of these ranges. When this is adjusted, we never broke 346 points. Does that make sense? Or we never broke back beneath like 256 points. So, and they did retrace back above here, which is the zone. And currently these are probably like the 420, 410 areas that I was just telling you guys about. Yeah, I find that they don't align as well with it being adjusted because the contract rollovers kind of change things, but I do want to see one thing though. I want to see if these are like linked back with like these mid structures right here. Yeah, they are. Interesting. Okay, let me reset this chart so then that way at least we have that kind of set. So everyone's aware that the big area of risk is obviously between 6288 to 6400 essentially. Like in the event that they were to push this back down, if we don't get back above a 256 point range. So like there's two ways you can look at this. From all-time highs, it'd be like failing to get back above 256 points. Okay? And it's also failing to retrace 173 points in range off lows, which is the same thing as half of 346, which is what puts your 346 point ranges or continuation in play. That's the quickest way I can summarize that. Make sense? Yeah, basically to get back above this range in here, which is, they also tested half of 346 from here. Okay, so like this area is very calculated. And where they open today, if they can get a 66 to 68 or 44 point break, should get us back to this range. Do you see that? And it should actually get us a better odd this time too. I don't usually issue things after the open with ranges, but we already were looking at the 6650s anyway, so. Yeah, because then that's what could not only push this another 256 points from here and basically come back to these candles in here, right? You can actually push 346 points from there, which is how you can potentially get back to these areas. But there is some mid support though, don't get me wrong. Like there's mid-range between the 6400s. It's not like you would just shoot straight down there, right? Like there's obviously the top of these structures in here. Do you guys want this in the report just so that at least you have that? Because it's not like there isn't support in this channel here. There is. I would say that this channel would probably be the first major support range if they ended up failing this area. And I didn't see how much this is, but maybe like you could measure like close to 88 points from that candle's low or the 256 point continuation. It's kind of just like the median between this structural support down here. And 44 points from here is probably close to core ranges. 33, 34 is probably just holding the zone. Yeah, it is. Look at that. 34 points, guys, from that low is right around 64, 88, 64, 90. So it makes sense that if they were to fail this area, that the zone could get back tested. So our support ranges are right around from the actual low around the zone. 44 points is around core areas, and then that, which would make sense if they want to have a core close. 44 point ranges make sense because this is 44 points to here to retrace. So 44 points from this low is going to be core ranges. And that makes sense because we're kind of trading with core areas right now. But a 66 point break is closer to like 6457, 6456, 6458. And if you guys remember, that was an area that struggled a bit in the past right here. And then they had to come back and try to retrace. So yeah, I don't have that marked, but I think we're working closely with these 44 point metrics. Basically 6478, 6480s. I'll just mark these in here so that you guys have them. I think that we have odds of getting that retracement up, but if you guys want this area in here first, I do think that there's some... That was the area that we had to sustain anyway in the first place in order for this to continue. Another way that you can think about this is, like in very, very short theory, we basically just have to get back 256 plus points above these August 1st highs, okay? And August 4th highs, which is basically getting back into the zone at 6687, 6688. Do you see what I mean? When you're looking at it with the adjusted. Okay? Unadjusted would be the 346. Make sense? So it's actually really cool because adjusted off highs, we need back over that 256. Okay. Unadjusted, so it's like 6688 zone entry. Unadjusted, you'd need back over 346. You see what I mean? That would help you take out these candles highs. I don't know if you guys can see that. Basically the 66.14 neutral stall or whatever that was. Because that's the area that they have to break. It's those 67.01, 02, 08 to give it an odd of retesting. 256 points. Yeah. Okay. I'm going to finish the report with the conditions. And I'll issue that in probably like the next 15 minutes. I'll see you guys tomorrow.